Right now, 2025, we are in the bull run. And it's ironic that we are in a bull run right before markets or prices will increase. At the same time, we're getting legislation around the world. At the same time, ISO 20022 got adopted by the Federal Reserve on July 14th. It's ironic that all these events are happening at one time. But with that being said, it's actually documented that the 4-year cycle is going to change. How it's going to look, I can't tell you. No one has a crystal ball into the future. I can just tell you what these institutions actively speak about. And the reason why they believe it's going to change is because, like I mentioned earlier, with these ETFs being put in the pension fund and 401k plans, like those investors aren't selling. That allows us to be able to hold certain levels that we weren't able to hold before. And that with these institutions entering the space as well, I don't think that they want to see an 80% drawdown on capital.
That would be like that 2026 traditionally would be the year that there'll be a nice pullback, and 2 years, and then we run into another 4 years. So that could all be changed in a matter of months.
That could all be changed. So I'm interested on what is actually going to look like. Will the 4-year cycle hold true? Like, maybe. Will the 4-year cycle not hold true and we have a small pullback? Maybe. Or do we just gradually go up over time? I didn't include the document in here because I only want to include one from State Street instead of the one about the reference. But State Street actually documented that Bitcoin is less volatile than some of the Magnificent Seven stocks, Tesla in particular. So for State Street to actively come out and say that Bitcoin is less volatile, I think that's very telling.
Indeed.
So I know that Larry Fink said, for those of you guys who don't know who Larry Fink is, he's the CEO of BlackRock. He's a very, very important figure in the whole entire world. But he stated that tokenization is happening, that all assets will be tokenized. But he's not the only one to think that. Who else thinks that? This document goes on to say, we believe there are decades of growth ahead for tokenized assets, and so do market analysts. The future predictions, Standard Chartered believes that by 2034, there will be $30 trillion of tokenized assets. Boston Consulting Group believes that by 2030, there will be $16 trillion of tokenized illiquid assets. Citi believes that by 2030, there will be $5 trillion of tokenized digital securities. Now, that's a lot of trillions when we really break it down. And that's only three organizations. So what is the entire tokenization market cap look like? Like, how much value do we have? If you look at the right side of this screenshot, it says expansible addressable markets. So the total value for all these markets, I won't go down and read each one individually, is $410 trillion. But then the question becomes, like, what's the actual time frame for us to tokenize these assets? Well, that's documented as well. State Street actually gave us the time frame to mass adoption for tokenization. At the bottom of the screen on the graph for those watching, it says time to mass adoption and transformative impact on the market. So this document came out in 2024. I think in August or November of last year, somewhere around that time frame. Now they're going to say 1 year from last year, the bond market will be tokenized. 2 years from last year, commodities will be tokenized. 3 years, private equity funds. 4 years, real estate funds. 5 years, equities. And then 10 years down the road is real estate. But that doesn't mean that that's when they will start tokenizing those assets, because these assets are actively being tokenized now. It's just time frame to mass adoption. So if we can realistically look and say 10, 15 years, according to State Street, that we'll have mass adoption for tokenization, and know that this previous document tells us that there's $410 trillion to be tokenized, that's a lot of trillions. We're sitting at a $3 trillion market cap, and I truly believe that the floodgates will open once we have regulatory clarity. Because institutions just need regulatory clarity. They have to know that when they adopt something, when they build something, that they won't be sued for doing so.
So that gives us to 2030. If I did the math right, by 2030, which is another one of those circling your calendar dates. Interestingly enough, when there was a report about the market cap companies over the next 5 years, and Bitcoin was the number 5 market cap company, surpassing Apple, surpassing Google, and this kind of aligns with that, no?
Aligns perfectly. And that's one of those confluences that I look for. Because me personally, I don't believe in coincidences. I don't read one document and think that's the end all be all. I need to read 3, 4, or 5 documents that are all saying the same exact thing for me to actually believe and actually be able to speak on it. and they're all saying the same thing. Now, the World Economic Forum actually has a vision 2025, where we start this adoption. And I've seen a lot in documentations that they want CBDCs, stablecoins, all to be regulated so that they can start building this infrastructure fully out by 2030. And ironically, that aligns with the next bull run. If the 4-year cycle holds true, 2029 would be the next bull run year. So will the 4-year cycle hold true? Who knows? I've seen it documented both ways. But if it does hold true, that still aligns perfectly with these institutional targets for 2029 and 2030.